Good evening, everybody. Hope everybody's having a pleasant, I guess you can't have a pleasant spring evening if you're stuck inside. So tonight, again, we got the great pleasure of having Kent Savage with us, who has got lots of good information on what to do with your taxes or how to take advantage of your tax situation if you're trading. So with that, Kent, welcome again to the Candlestick Forum. We're anxious to see your information tonight.
Thank you very much. I'm really excited to be here. So obviously this is the most exciting topic ever, taxes. And I know everybody thinks that's super exciting, but the one sad thing is everyone does have to pay them. And obviously when it comes to trading, we want to make money. And when you make money, you got to pay taxes. So tonight I'm going to talk about some basic steps. And when I say basic, what I mean is anybody can, this applies to most anybody as long as you're an active trader, which we're going to talk about what that means in a second, which I'm sure a lot of people are already very aware of what that means. But I'm going to talk about some basic things that you can do to save money. Okay. Now, as I get into this, just so you guys know, I have to do the disclaimer. I'm an attorney. That's what we do. It wouldn't be an attorney webinar without having a disclaimer. So take a look at this. All it's basically saying is this is not individual legal tax advice. Please, I'll give you an opportunity for us to speak later and take a look at that. But don't take anything I say as creating a relationship between me or you. Personally, this is just, I'm giving you some good information that is applicable in a lot of situations. All right. Now, everyone trades because they want to make money. I've never met anybody who trades because they don't want to make money. And obviously, when you make money, you pay the taxes, like I've been saying over and over. No matter what you're trading or how you're trading, taxes is basically your largest expense. Okay. And if we can lower your taxes, you can do different things. Even if you're increasing your trading by a few percent, doing different strategies, one of the things you can also do pretty easily is lower the percentage of taxes you're paying. So it brings you back a big return. And again, you can generally do this just with getting the right help. Now, some of you have heard of the active trader status. Okay. I'm going to talk about what exactly an active trader is. But if you are an active trader, or I'm going to talk about who qualifies as an active trader, but basically an active trader is when you're trading as a business. Okay, so you're no longer just trading on the side, just your money in your own name. You actually start a business and you trade within the business. Now, this is a more tax efficient way to trade in a business because what we get to do is we get to take the business side of the tax code and apply it to your trading. Okay. Now, one of the reasons we want to do this is because taxes, when the tax code was written in the 1980s, it's been updated in different ways, but they overhauled it in the 1980s. And one of the specific things that they did was they gave people a lot of deductions if they have a business. And you can apply those deductions if you have a business. Now, what is a deduction? That's if you have, let's say you make $100 trading, okay? Well, you make $100, but let's say I'm going to take a business meal deduction and I go out to eat and my meal costs me $30. Well, if you have your business pay for the meal because we can have it classified as a business meal, then that means you got to eat the meal and now your business only has a profit of $70, which means you only get taxed on the $70 instead of the original $100 and you got a meal out of it. Okay, that's a business deduction. It's where we get to use the income as a business as an expense before we ever have to pay taxes on it. Now, this is different than when you simply make money, because if you're just trading and you make $100 and it's not in a business, then you get taxed on that $100, and then you can go get a dinner or whatever you want to do with that money, but you still had to pay taxes on that full $100. So that's what we're going to talk about. Now, when I said having the business deductions, one of the reasons it's important to actually have a business is you can't apply these businesses, you can't apply the business deduction if you're just trading as a hobby. Now, when I say trading as a hobby, what I mean by that is you're not actually treating it like a business. So when we actually go through the steps of setting it up like a business, you get to take those business deductions, whereas a hobby is just doing something on the side. Now, when you do something on the side, the IRS does not let you take the business deductions, okay? Now, who gets to qualify to start a business or to be an active trader? Like I said, that's starting a business, or that's how you qualify to run a business as you're an active trader, okay? Here are the general rules, okay? You do 200 to 300 round-trip trades per year. You have about 500 hours dedicated to your active trading. Now, and if you break that down by week, that's about 10 hours a week. And when it says active trading, that doesn't necessarily mean you're actually trading. It means you can be studying. It means you can be listening to webinars like this. You can be on the forum. You can be doing any of that kind of stuff. If you're spending that time and doing that research and actively trading, that all counts towards that 500 hours, which is about 10 hours a week, a little bit less, okay? They also want to see you trade throughout the year. So if you trade for about 170 to 180 days a year, that kind of shows that you're trading throughout the year. So the three things they want to see, again, 200 to 300 round-trip trades, 500 hours, and trading throughout the year, which we're going to call 170 to 180 days. All right. Now, by the way, if you guys have questions, feel free to pop them into the chat. I will look through, and I'm going to be really excited to go through your questions. If I see any that I think I need to get to right away, I'll do it, but expect me to kind of circle back at the end, and we'll get to everything. Now, we want to establish your company as a business. And creating a business is something that we do to show the IRS that we're not a hobby. It lets them show that we're serious, okay? Like I said, we can deduct your expenses. We can also generate a loss that can be carried forward from our activities. In some instances, again, depending on the tax selection we make, which I won't get in a ton here, I'll mention it a little bit later. Let's say you work a normal job, 9 to 5, and you get W-2. In some instances, with some of your trading, we can actually, if you have a loss with your trading, we can deduct that against your income, okay? But again, it just depends, but we need to start a business to be able to do that. Now, even if you when we get set up with the business, not only do we get to take the business deductions, which you'll see is the middle line here on this slide, you get to deduct your expenses. There's a bunch of other positives when you start a business. One of the nice things is the no reclassification issues, which that's the hobby. That's the IRS saying, hey, you're just a hobby. We're not going to let you take deductions. You also, believe it or not, you get a lower audit rate. So when you start a business, there's much less of a chance that the IRS is going to audit you because they think you're actually serious about running a business. And like I said, the government wants people to start businesses, so they give them deductions and incentives to actually do that. Now, most businesses are what we call a pass-through for taxation, which means if you have a loss in the business loss will flow through to you, which is generally a good thing, okay? And then finally, you get a little bit of asset protection. Some of you might have heard people talk about asset protection. It's a whole big topic for a whole nother time. But the basis is if you have a stream of income, if you put it inside of a business, it's much more likely that that's going to be protected. If, excuse me, if you get in a car wreck or somebody comes after you and tries to take your money away because of something like that, if you have a business, that's going to go a long way in protecting that stream of income. Again, that's a little more deep. There's more details that we can't necessarily get in tonight, but it's going to be, that is one potential benefit. Now, someone actually asked here, And how do we track our expenses? You will have to track your expenses. The reason why you track your expenses is, number one, so you can actually take them on your tax return. You can report the right numbers. Now, the IRS can ask you to prove that you deserve the deduction. Okay. When you have a deduction, it's considered to be a legislative grace, and that's from this case that you see in front of you. If you want to read through it, go for it. But what happens is the courts have said, if you take a deduction, the IRS has the right to ask you to prove it. Okay, so you do have to take records. Now, there are different ways to take records in different areas, and I don't have time to go into all of them tonight, but I'll talk about some of them a little bit later. I'm going to talk to you about some deductions and types of deductions. I'll tell you some of the things that they look for. Now, this is a little bit different than necessarily taking a record just for accounting purposes. It's good to have that record, but there's little tricks and things you can do to make sure your record is kind of audit-proofed, and that's something that's really kind of cool. Now, I'm going to talk about some of the different deductions that we can take. The very first one I'm going to actually talk about is startup costs. Startup costs, so a lot of people will go and they'll learn how to trade, or they'll do different things where they spend some money before they ever start a business. The money that you spend doing that can be a startup cost that we can apply to your business. That's one of the deductions you can take. So even if you spent money in the last, basically you can look back about a year, sometimes 15 months. If you spent money in the last year, you could start a business today and use the money that you spent in the last year as a deduction. Now, they limit the deduction to about $5,000 if you haven't started the company. If you start the company, that limit, you can still have expenses for education and other things, and you can deduct all of it. But if you haven't started the company, they limit it to about $5,000. If you spent more than $5,000, we can still take the deduction. We just don't do it right up front. We put it into the business, and it gets deducted little by little over time. So we'll talk about some of the other expenses though. But just so you know, we can capture some of the costs that people have already used to learn how to trade and do other stuff like that. Now, in a second, I'm going to talk about different types of businesses. But one of the main, but here are some of the main expenses that you can deduct. Okay, so I mentioned the organizational expenses. That's the first one. Equipment purchases. So equipment can be your computer. It can be basically anything electronic, monitors, anything that you have on your desk. Your phone can be equipment purchase, okay? Automobile expenses, so mileage. Some people think that it's hard to get mileage in a trading company. Oh, my friends, you have no idea. You can do a lot of great things. Anytime you drive to a business meeting, which we can talk about business meetings and how awesome it is. We can have a lot of your meals be business meetings, all right? If you drive to travel somewhere connected to your business, there's all these things that we can do where we can actually get you a lot more mileage deductions. You can make contributions to retirement plans. So some people don't know this, but you can actually set up a business and you can set up your own retirement account with it. Okay, you can set up a 401k in your own business that you can contribute to. You can have an IRA that you contribute to. You don't necessarily need a business for certain types of IRAs, but it's one of the perks of setting up a business. You can make contributions. Okay, you can deduct life insurance, all your travel. Okay, you can deduct that has to do with the business, and you can deduct meals. So, a lot of cool things there that we can deduct. Just to give you an idea of how this works, let me tell you about meals. Okay. Meg said, are meals 100% or 50% deductible? Meg, it's actually 50% right now. It's 50% until 2023, and then we'll see what happens in 2023. But that was part of the tax when they passed the last tax bill in 2017. They said that part of lowering the corporate tax was taking away some of the meal deduction. Okay, so it's only 50%. But that being said, let's talk about when you can actually use it. Okay, so if you look at the tax code, and you read the tax regulations, which are the commentary on the tax code that the Treasury Department puts out, it actually says that if you have a meal with another person outside of your home, okay, if you discuss your business with that person, then that can be a business meal. Okay, there's some tiny little nuances more than that, but not much, to be honest. Okay, so if you have a meal with another person outside of your home, you can have that be a business meal. Now, that person can be a partner. It can be a potential client. It can be a client. It can be um, it can be an advisor. Now, that can mean a lot of different things. But let me just give you one idea. If you're married, if your spouse is a partner in your business, meaning that they're actually on the ownership paperwork, which is what we generally do with people, then anytime you have a meal with that person outside of your home, boom, business meal. Okay? And I want you to always make it a business meal. If you had a meal with a friend and they're a smart guy, or they work in medicine, okay? If they're saying something that helps you or gives you a little bit of insight into their industry during your conversation, boom, business meal, okay? And what you find out is with a little bit of legwork, almost every meal you have can be a business meal, okay? Which is really cool. Now, generally, it has to be out of your house. DY asked, hey, if you have a business, can it be, if you have a meeting with partners or mentors, but it's catered at your home? Probably. There's some little specific things with that, but the answer is probably yes. What there's lots of things there, but let's talk about the mileage real quick. Sometimes people don't realize that, hey, we've got all these business meals that we're having, which is basically going to be any time we're eating outside of our home with another person. Well, all of our miles to and from that restaurant are also going to be business meals. So let's say I had a business lunch this afternoon. Actually, I drove about 5 miles to the restaurant, and I drove 5 miles back. Out here where I live, they've actually opened up some stuff. So we went, had masks on, sat down, had a lunch. 5 miles there, 5 miles back. The mileage deduction rate is, I believe it's 57.5 cents per mile right now. Okay, so my 5 miles there and 5 miles back, that's a $5.75 deduction right off the bat, and that's just for me driving there and back. And I did not spend $5.75 worth of gas. Okay, it was much less than that. So it's really cool. So not only did I get to deduct the meal, I got to deduct the mileage. So there's just a couple examples of what you can do. One of the other things I want to point out, if you have a C corporation, C corporations aren't for everybody, but you can deduct medical expenses basically if you have a C corporation. So what does that mean? If you're someone who has a lot of medical expenses or your family has a lot of medical expenses, sometimes you can actually have a C corporation, and if you have some profits from trading, we can actually use the medical expenses as an expense for your company, which means your company is paying for the medical expenses, and that's a deduction for the company, meaning that the money is not taxed. So if you make $100,000 trading, but you have $30,000 of medical expenses, well, if you do that with a C Corp, then what happens is the entire $30,000 is written off, and you don't have to pay taxes on it. That's just a little aside. That's one of the things that we could do. Now, people are going to be asking, what type of business should you set up? Okay, there's lots of different types. You'll see that we have here the 4 main types that people generally set up, and these, you'll have a sole proprietorship, okay, an LLC, a C corporation, and an S corporation. A sole proprietorship is when you set up a company and you actually don't file that company with the state, you only file it with the federal government. You still have to go and you have to file it, but you've only filed it with the federal government. In other words, you didn't actually set up an LLC or a corporation. This isn't really, the government doesn't always consider this setting up a business. They really like it if you actually set up an actual business, but you can still try to take business deductions doing this. You actually get audited a lot. There isn't any asset protection, but it doesn't cost very much to get it set up. Okay. That being said, that actually gets turned into a hobby a lot. If you do the sole proprietorship, you can say, hey, I really am doing a business, but the government will oftentimes say, I don't know. Let's just classify it as a hobby. Now, limited liability company, this is generally what we recommend people to set up, okay? You can just deduct your expenses. The audit rate goes way down, okay? Generally, we put 2 owners of the LLC to do the tax return. This is usually a husband and a wife or partners. It can also be parent-child. It can be a friend. We can do a lot of different things to make it work for you if you're not married or your spouse isn't interested or your partner is not interested. We can make it work for most people. We can deduct most of all of our expenses. It's a great way to go. C corporations, this is generally for people who they earn a lot of money. Usually C corporation numbers after taxes, if you're making about $315,000, it's actually more now. It's like $323,000 or more a year between a husband and a wife or from your trading. Sometimes we'll talk about this going the C corporation method, or if we need to take a lot of medical deductions, that's something we can do. S corporations, guys, a lot of you have S corporations, okay? Generally, S corporations are excellent for running a business. They're super, super great for running a business. They're not always the best choice for doing a trading business. Without getting way in depth on that, there is, well, a quick explanation is basically the tax structure for trading is different than the tax structure for different types of businesses. S corporations are specifically put in place so that you can lower the payroll tax you have to pay. Traders do not have to pay payroll tax ever. So S corporations aren't always the best fit for a trader. That being said, if you are someone who owns a business and you already have an S corporation or someone else has set up an S corporation for you, we can make it work in some instances, and sometimes it does make sense to still use it. Let's just talk about it. Let me know. We can talk about it and discuss your specific situation, because sometimes we can just go ahead and do that. So just let me know. So what should you set up? It really depends. Okay, LLC, C corporation, S corporation. Come and talk to us. We'll let you know. I'm going to give you a link at the end where you can sign up to talk to us and have a free consultation. And we can talk about your situation specifically and see if it makes sense for you. All right. Now, a really popular question that I get is, where can I set up my business? Okay. I'm going to say this in the nicest way possible, but also kind of directly, guys. Don't never set up your business in Nevada, okay, unless you live in Nevada, okay. There are all of these states out there that want you to have your business, to have you come and register a company there. And one of the things they'll say is, hey, come to Nevada. There aren't any state taxes here. Well, that's true, but you don't live in Nevada. So if you set up a company, your state wants to know that you set up the company, and they actually require that you file that company in your state. So what's going to happen is you set up a company in Nevada. What Nevada also doesn't tell you is Nevada is an expensive place to set up a company. You're going to pay a bunch of money to set up the company in Nevada, and then you're going to pay a bunch of extra money to have what they call a business license, which they make everybody pay even if they're not actively engaging in business. So you have to pay the business license fee. And then you have to go to your own state, and your own state's going to say, hey, whoa, what the heck? You set up a business in Nevada, but you didn't set it up here. You have to register that company here. So then you have to register it in your own state. And now you're registered in 2 states and paying fees in 2 states, and you didn't get out of paying any tax. Sometimes there can be a reason to set up a company in Nevada. Doesn't mean it's the worst place. It's generally not for traders, okay? Certain reasons, certain asset protection reasons, and still not Nevada, to be honest, guys. If someone's selling you Nevada, they're trying to sell you something, okay? There's other reasons to use other states. Nevada's really not that great of a state to set up a company. If you live in Nevada, it is a good state, okay? So those of you who live in Nevada, go for it. If you don't live in Nevada and you have a Nevada company, talk to us. It doesn't mean it's the end of the world. I'm just saying, if you haven't done it, don't do Nevada, okay? Set it up in the state where you live. If you're going to move, talk to me about it. Some people will live in one state for one part of the year and live in another. Again, let me know. We can talk about it, discuss what's right for you. But generally the answer is set up the company in the state that you live. All right. Now, one of the cool things about setting up a company is we can do something that's called the mark-to-market election. Now, I'm not going to get way into it, and I actually have another slide a little bit later that I'm going to show you on it. But mark-to-market actually gets rid of wash sales. So here is I want to share with you the wash sale rules. Some of you know what this is, but I'm going to read it because this is the kind of language that's in the tax code and it's a little crazy. But I'll explain it. But I'm going to read it. It's going to be a little boring. Hang in there with me. I'm reading it to illustrate a point here. Okay. Disallowance of loss deduction in the case of any loss claimed to have been sustained from any sale or other disposition of shares of stock or securities where it appears that within a period beginning 30 days before the date of such sale or disposition and ending 30 days after such date, the taxpayer has acquired by purchase or by exchange on which the entire amount of gain or loss was recognized by law, or has entered into a contract or option so to acquire substantially identical stock or securities, then no deduction shall be allowed under Section 165 unless the taxpayer is a dealer in stock or securities and the losses sustained in a transaction made in the ordinary course of such business. For purposes of this section, the term stock or securities shall, except as provided in regulations, include contracts or options to acquire or sell stocks or securities. Okay. That was a long way of basically saying this. If you purchase a stock and you sell it within 30 days, if you have a loss on the sale, and then you buy it back within 30 days. So if you have a stock, you sell it, you have a loss, and then you buy back into that position within 30 days, the IRS pretends like you never sold it in the first place. So that loss that you took when you sold it, they pretend like it never happened. Okay, that's a wash sale. So you have a loss that they basically just disallow. All right, which is frustrating because you still, if you sold it and you had a gain and then you bought back in, they still tax you on the gain. All right, so if you have a loss, no bueno. If you have a gain, they're all dancing because they get your money. All right. Now, the reason why they do this, it's kind of a weird rule. One of the reasons why they do it is this example right here. Let's say it's December 31st and you want to have more losses on your taxes and you look and you say, you know what? I have all these positions that are down. I'm going to sell them, but I really like them in the long term, so I'm going to buy back in. So I'm going to sell them today, but tomorrow, and that will be a loss for the year because it's December 31st. But tomorrow, I'm going to buy back in. So you turn around on January 1st and buy back in. Well, you've technically created a loss on December 31st. But the IRS says, nope, no way. We're not going to let you do that. Okay. There are ways around this, and I'm going to talk about it. When you start up a company, one of the things that you can do is you can take mark-to-market. Mark-to-market is an election, okay, that allows you to take that position, or it allows you to basically get rid of the wash sell rule. So you could do that. On December 31st, you could sell your positions and then buy back on January 1st, and you'd still be able to take that loss. Okay. Now, as a lot of you know, you can be trading and you have a lot of wash sales just in the course of trading, especially if you have certain stocks that you like, or some of you do high volume. There's different ways of trading that people deal with it a little bit more. But you can take that election. Now, there's a bunch of other stuff that it does. It also, I'm not going to explain what this means, but it takes your capital income and converts it to ordinary income, which basically means, I'm not going to explain the details on that, but basically what it means is if you have a loss, then, if you're lost from trading, you can deduct that against your normal income. So let's say you have a job, you make $20,000 and you take the mark-to-market and you lose $20,000 from trading, you get to tell the IRS that your income is zero for the year, which is kind of cool. If you don't take mark-to-market, you don't get to do that. You say, hey, I made $20,000 here, and they tax you, and then you say, I lost $20,000 here, and they say, oh, that's a bummer, man. Don't worry, we'll let you carry that loss forward to the next year. Okay? If you take mark-to-market, you get to combine it in that year. But again, that's a discussion for a different day. But it's different. That's different things you can do when you have a business. So not only do we get to take deductions, not only do we get to find ways to save you a bunch of money just for the things you do every day, like eating meals, stuff like that. You will be able to do other more kind of advanced tax decisions like taking the mark to market. And again, we can talk about that and if that applies to you or not. All right. Now, I did get a note that says my voice keeps cutting off. I will try to do my best to make sure that doesn't happen. Let me talk about...
Kent, let me interrupt. If you're having problems with sound, most people aren't, so it's usually your server. So the best thing to do is go up to that. There's a circle with an X up there in the very top right of your screen. Click on that, which will click you off, and then come back in, and hopefully you've got a better connection. All right, go ahead, Kent. Sorry to interrupt.
No problem. Thank you so much. Okay. Now, I'm going to get to your questions here in just a second, guys. So if you want to, feel free to start putting the questions down. I'm going to start getting to them. But let me make this last point here, okay? When it comes to accounting, there are a lot of people who are good accountants and they know what they're doing. Trading accounting is a little bit different, okay? One of the things with trading accounting is that when you trade, your the money that you make is not subject to payroll taxes. And this is when I mentioned the S-Corp thing. A lot of people use S-Corps and it works really well. It doesn't always work for people who trade because of this, because you don't have to pay the payroll taxes. Payroll taxes on a business that you own are 15.3%. Okay, this is before your marginal tax rate. So this is money that you make, that you pay before your money ever comes to you that you have to pay your own taxes on. Okay, so when someone says, my marginal tax rate's 21% or 24% or even the highest rate of 37%, that does not include the payroll tax rate, which is 15.3%. Okay, traders do not have to pay that tax. If you go to an accountant who doesn't know that, most don't. Okay, it's a very trading specific. If your accountant doesn't do traders, they do not know that rule. You will overpay by 15.3%. Okay, there's other things that have to do, other issues that have to do with actually with actual trading, but that's the biggest one, you guys. So I just want you to know about it. We would love to talk to you about your specific situation. If you're thinking of actually setting up a company, or you want to know which one's right for you, if it even knows to, or if it even makes sense for you to start a company or think about it with where you are with your trading, or if you're paying a ton of taxes and you're like, heck, I need to pay some less taxes, let us know. Sign up for a free consult, www.tradersaccounting.com/CSF, like Candlestick Trading Forum, right? Candlestick Forum, CSF. Thank you, Becky. Becky just put it in the chat. You can click on that link and actually sign up to talk to me, okay? Or somebody else at Traders Accounting. They will talk to you again about your situation. It's a free 30-minute consultation, no pressure. This is just to see what would work for you, okay? So I'd love to talk to you specifically about your situation. So I will leave this slide up so you can look at that. I'm going to start running through the questions here. Please feel free to continue to ask questions, and I'll get to as many as I can. I've answered a couple, not very many, but I've answered a couple as we've gone through. So I will do my best to get to what I can. If I skip yours, it might be because I thought we've answered it, but we'll do what we can, all right? Let me... Somebody said, if I'm trading, this is RKR, they said if they're trading out of a retirement account, so an IRA, SEP, or 401k, does that qualify as business trading? That's a great question. The answer is no. So if any of you guys are trading out of a retirement account, The retirement account doesn't have to pay any taxes until you pull the money out, or if it's a Roth retirement account that never has to pay any taxes, okay? So you don't actually need to set it up as a business account because there aren't taxes anyway. And to set it up actually with a business, it's not impossible, but it's very hard, and it's usually not worth the hassle. It's not worth the benefit at all, because you don't have to worry about deductions or anything because you don't have to pay any money on the taxes. So that's a great way to trade. Again, if you want more guidance on it, feel free to reach out. We have a 30-minute consultation. It's free. Let's talk about it. But yes, if you're trading out of one of those accounts, no, you do not need to set it up. AC asked, could we have the slides via email? You know what, AC, we used to send them out via email. I'm not sure if we still do. Set up a time. If you just want the slides, just say, hey, I was just looking for the slides. I'm sure we can send it to you. All right. Gary asked the same thing. Can an IRA be a trading business again? No, not out of an IRA. We don't need to worry about that. M. Nunez said, I was talking about business activity, and they said, do we need to keep records of that activity, those expenses? And if so, how do you exactly do it? Well, it's very different, guys. If you, depending on the type of deduction, different things are recorded differently. Mileage, they like to have a log. If you have a meal, I told you about meals. I told you about the cool things we could do with meals. Here's the little trick with meals. This isn't necessarily an accounting trick. This is a legal trick. Not a trick. We're not trying to trick anybody. I just mean it's a nice little thing to do. Take your receipt, flip it over on the back, write down your name, write down the name of the person that you were with during the meal, and write down in three words or less or whatever, just a really short little blurb on the back about what you spoke about. For example, hey, we talked about how pandemics affect the markets. Okay, you put that on the back. That's all you need. That shows that it's a business meal, and that's proof that you had a business meal. That's the most I've ever seen personally the IRS look for. Doesn't mean that they haven't ever tried to look for more info, but generally, no, I've never seen that. Harry says, can I have active trader status if I have 40 hours of a W-2? Yes, absolutely. Okay. For all of you out there, you can be an active trader even if you have another job. Okay, you just have to fall into those categories. So a lot of people will spend time trading in the morning, or they'll trade, on a certain day. That's totally fine. As long as you get close to those numbers, we can talk about it. If you're not right on those numbers, still call and talk to us. Those numbers are not set by the actual IRS. They are numbers that have come from cases where the IRS has said, hey, we don't think this works, and then the court said, yeah, it does. So just so you know. Do you need to have a minimum trading account? No, you don't. You don't have to have a minimum trading account at all in order to start a business. Now, whether you want to take the money to start a business just depends. So call us and talk to us, and we'll talk about where you are and if it makes sense. Okay, a lot of times it makes a ton of sense to start a company and still take the deductions. Sometimes it doesn't. So give us a call. All right, that's a very good question. But no, there is no minimum amount required. Someone asked about registering an S Corp and what's the cheapest way of registering it. Call us and talk to us. The problem with registering an S Corporation, and again, whether or not an S Corporation even works for trading, call us and talk to us about your specific situation. You have to do a filing with the IRS, and it has to be done exactly right, or it's not going to be accepted. I've actually seen some people send these in. The IRS looks at it and says, oh, you didn't fill this out right, and they literally just throw it away, and they never tell you. It's a pain, okay? But that was a good question. Pat says, are memberships and trading rooms deductible as business expenses? Absolutely. Okay, so memberships, here at Candlestick, all of that, absolutely deductible. Absolutely. Can you write off the loss even if a call or put expires? If you spent the money, yes, you can, Martin. But again, we can talk about that in a little more detail. You were probably told incorrectly, but we can talk about that. but yeah, it's if you spent the money, it was for your business, we can generally write it off. Um, Anna asked, what's the best software for traders to keep the books? A lot of people use QuickBooks and they really like it. We work with people, different platforms. We can talk to you about what we like. A lot of people do like QuickBooks though. It is great to keep a record. So there's a lot of stuff out there. I don't want to say anyone's not good enough because there's a lot of great stuff. Someone said, how far back can I go to write off an expense such as tuition? The most we can go back is 15 months. Okay, that's the farthest we can go back. So usually I say 12, but sometimes we can do that. Someone said, can I set up a business? Is an LLC a good way to go? We talked about that. We talked about meals being 50% deductible. Someone asked if we could start a business today and you don't have to notify the IRS before you start the business. You actually don't have to notify the IRS before you start the business. Businesses get started at the state level. A lot of people don't realize that. So when you start a business, you generally start it at the state level. So you go to the state and you say, hey, I want to start a business, and you get it going. And when the state says, okay, you're approved, then you can go to the federal government and say, hey, I'm doing this. You don't have to do it. You should do it right away. If you don't do it right away, it's not the biggest deal in the world. We just let the IRS know that we started, and we're letting them know a little bit late. It's usually not a problem. If we're taking an S-Corp election, then yeah, we need to do it right away. Or if we're going to take mark-to-market election, we want to let them know as soon as possible. But again, it's not the end of the world. I was talking about food deductions, and CB asked, what if you eat at home while trading? CB, that's actually a really good question, and it's debated among different people. The answer is sometimes, which is the most, or maybe I should say it depends, which is the most lawyer-like answer I could ever give you. When someone asks me a question, I can always say it depends when it comes to the law. So it depends. You're going to have to, we can call and we can talk about it specifically. Do a consult, we can talk to you about it. Let's see. Home office expense. Dennis asked if you can do the home office expense. Okay, Dennis, this is actually a really good question. Okay. You can do a home office expense, absolutely. Depending on who your partner is, sometimes we take it in different ways. So you can actually have a home office expense that we stick on your tax return as a home office expense. And sometimes we actually take it as a reimbursed expense for you personally, but it's still the home office expense. So we bundle it a little differently, but you still get that expense. That's actually a really good thing. I never actually mentioned that, but a home office expense, absolutely. Someone asks, is it better to trade from a C Corp or an S Corp? Again, usually we don't always use either of those. If you have an S Corp already for a different reason, sometimes the S Corp works really well. C Corp works well if you're in a higher tax bracket, or if you, again, if you have a lot of medical expenses. Sometimes for some people in certain situations, you actually combine entities. So you can have an LLC over here and a C Corp over here and use them for different reasons to save even more on tax. But that's, again, call us and talk to us. We can talk about your specific situation. Thank you guys for all these questions. They're great. Someone asked if they have a full-time job, does it affect your deductions? The answer is no, it does not affect your deductions, okay? Here's one of the things people don't realize. You are absolutely entitled to take the, so if you have the deduction and you qualify according to the rules, then you get to take the deduction, and the IRS has no problem letting you take the deduction. People think that sometimes if you take a deduction, it's this big red flag with the IRS. That's actually not true. It's an old wives' tale, okay? Now, they have different ways that they look at stuff, different types of deductions. One of the things they can do is compare your deductions year to year, and if there's specific deductions like a home office deduction and you haven't moved and you significantly change your home office deduction, that might be something that they decide to look at. It doesn't mean they'll audit you, it just means that they might just take a look, okay? But outside of that type of thing, deductions don't get you audited. They're not sitting there looking at the deductions. In fact, most people that get audited are really high earners. Again, there's always exceptions to this, but in general, if you're making $1 million or more, you're more likely to get audited. If you are making $1 million or more, do talk to us because you need to have the right tax structure, which is oftentimes a combination of structures. But just so you know, um, when you're trading, you generally won't get audited for taking deductions, even if you have another job. All right. Great questions. Someone asks can you have a one-person LLC? That's actually a really good question. The answer is yes. You can take a tax election with a one-person LLC to be a C corporation or an S corporation, or it can be a disregarded entity. That was a really quick, complex analysis of that. Basically, an LLC can take elections to be different types of entities for tax purposes. It's really versatile, so we really like them. Some people are in a situation where you actually start out with an LLC and it doesn't make sense to make you a partner yet or have it be two-person, and then we add somebody when you're making enough money. But again, we can talk about that. You can give us a call. Um, um, let's see. Bill asked, does the wash sale count for options? The answer is yes, absolutely. It does count for options if those options are, if they are stock-based options. Okay, if you're trading equity-based options, the answer is no. Equities is a different animal. Okay, but yes, for stock-based options, it does count. Someone asked, can you take a loss on a position? I think this is back when we were talking about the mark-to-market. Can you take a loss on a mark-to-market position? Eventually, yeah, if you sell, if you had a loss that was taken away from you and then you sell again and there's another loss, you get to take that second loss, but you don't get to take the first loss before you bought back into the position, and there's nothing you can do about it. And in fact, real quick sad story. I actually have a close relative who had a bunch of positions for a really long time, and he'd been holding on to them, and he had a huge profit on them. And he decided that he wanted to change brokerages. So guess what he did? He sold the position so he could have the cash and went and bought the exact same positions. And he did it within like 2 days. Okay. He was taxed on all of that profit. He ended up paying like $10,000 in taxes. He didn't even want to pull the money out. He was just trying to change brokerages. And we didn't talk about it before, but that was a situation where because he did that, he had to pay a bunch of taxes. But if he had done that same thing and there had been a loss, and then he had moved back into those positions within 2 days, that never would have happened to him. Okay, so they wouldn't have let him take the loss, but they sure as heck taxed him on those losses, which was just so sad. Poor guy. Someone said, years ago I read that you have to fill out a form and file with the IRS the year before you start trading as a business. That is NISA. Great question. I actually, for some reason, get this a lot. It's not true, okay? I do get that a lot. People think you need to do that. And I think it's because a lot of tax people or a lot of trading people talk about being an active trader, okay? Or and that seems like it means something more than just starting a business, and it doesn't. Okay, you just have to start the business. And then you tell the IRS when you do your tax return, hey, I've started a business. You're going to treat my trading as business income now. Okay, and that's all you have to do. You can send something into them if you want, but you don't have to. Excuse me. Someone said, if you trade with your 401k, can you deduct trader expenses when you withdraw your money every year from minimum required distributions? Well, that's actually, VG, that's an interesting question. The problem, so you're not going to deduct business expenses. You'll have expenses, money that you have to pay for trades, right? That money automatically goes out. So that's taken into account when you do your required minimum distributions. that already gets taken out, so it is factored in there. But business deductions, no, and you're not going to have any because it's inside of retirement account. Let me answer just a few more of these guys. I don't want to kill you with boredom. Ron says, if a trader is not classified as an active trader, wouldn't trading gains be capital gains? Ron, trading gains are always capital gains unless you take a mark-to-market election, just so you know, even if you are an active trader, it's always capital gain. But you can still take active business deductions. So that's actually really interesting. It's not, that's something that's unique to trading. It's still capital gains. So just so you know, and your losses are still capital losses. Can I trade inside my IRA with no tax repercussions, Brad? Yes, you can. You have to pay taxes if it's a traditional IRA and you're pulling stuff out. You have to pay taxes, or if you're trading on margin, which most places won't let you trade on margin in an IRA, it's probably not something that I really need to address. But then you would have to pay taxes. But generally, the answer is no, no tax repercussions. Gary says if I have an S corp but I don't pay a salary or distribution, there shouldn't be any payroll taxes. Gary, if you have an S corp, you are supposed to pay a salary and a distribution. But there still wouldn't be payroll taxes with trading. But again, we can talk about that specifically. If you have money in an S corp and it makes money, then that is considered to be earned by the S corp, and there's nothing you can do. That money has to move through it that year. But again, we can talk about it. It's a good question. I'm a 1099 salesperson, take some deductions, but I benefit with lower taxes. Pat, if you're a 1099 salesperson and you do not have a business, go right now and start a business. Okay, call us and talk to us because you absolutely are going to save bundles of money if you start a business. Excuse me. You're someone, if you're a 1099 salesman, you're probably going to do really well with an S corp. You're going to save a ton of money doing that. And I don't mean I mean thousands and thousands and thousands of dollars. So if that's where you're making most of your money as a 1099, anybody out there, start a business because you're going to save yourself tons of money. This is trading aside, just so you know. You're probably going to save yourself, well, I shouldn't throw out numbers because I have no idea, but you're going to save yourself thousands of, if you make thousands of dollars, you will save thousands of dollars in an S corp. All right. So call and we'll talk about it. Guys, I really appreciate you. Let me just do a couple more here. Someone said you have to do all three of those things for active trader status. Yes, it's flexible. So let's talk. If you're close, if you've done two, we'll talk about it. Okay, let's talk about what you want to be doing, what your goals are. The answer is sometimes, but again, or should I say it depends. Just we can talk about it. Do you have to hire a bookkeeper to keep track of your trades? Generally, the brokerage account tracking is fine. Again, we can talk about it. It's nice to have a bookkeeper to keep track of your deductions, but your trading, generally, you can just use the brokerage account. Someone said, am I talking about setting up a business or also doing business and personal taxes? So our accounting firm does business and personal taxes. You don't have to do them all through us, but we will do 1040s and everything else. So again, feel free to talk to us and we'll see if it makes sense. Someone said, do I change the name on my TD account to a business name? I have several businesses registered already. Call us and talk to us then. Let's see what businesses you have and what makes sense for you to change. Because yes, you do want to get inside a business account. If you already got some businesses, reach out. Let's talk about it. Tell me what you have. Tell me the details. We'll tell you which one you can use. It's that simple. Someone said that a capital loss carried forward of 300,000, but they have made close to 25 in the last 2 months. What am I considered? Give us let's actually have a consultation. So these personal questions, guys, love to talk to you about it. So let's just talk about it. It'll be great. Thank you very much, everybody, for your time here. I really appreciate it. I would love to, again, if I didn't get to your question, feel free to just reach out. I would love to talk to you all. Again, free 30-minute consultation. My name is Kent with Traders Accounting. I really appreciate the time, and I look forward to doing this again. Thank you very much.
Thank you very much, Kent. Good information. The reason we have Kent come on is because he specializes in this type of tax work. So you often will find your accountant knows something about what to do, but they don't know the exact right things to do. So if you've got questions, give Kent a call. You don't have anything to lose, just to talk with him. All right, everybody. Thank you for showing up. We will see you bright and early in the chat rooms tomorrow. Kent, thank you. Everybody have a good evening.
Thank you all. Good night.